Here is something that will sound very familiar to anyone who has traded cryptocurrency for more than a few months. You wake up on a Monday morning, you check your portfolio, and the overnight numbers look genuinely exciting. Bitcoin and Ethereum both charging higher, green candles stacking up on the chart, social media buzzing with optimism. Then, within the first few hours of the London trading session on Monday the 13th of July, 2026, it happens. The rally stalls. Prices pull back. And suddenly everyone is asking the same question: was that opening surge real, or was it a trap? That is exactly the situation playing out in crypto markets as we record this. Both Bitcoin and Ethereum opened strongly this morning, only to retreat as the European session got underway. Today we are going to cut through the noise, look at what is actually moving these prices, and give you a clear-eyed picture of where things stand right now. Let us start with Bitcoin, the market's benchmark and the asset that still sets the tone for everything else in crypto. Overnight, Bitcoin built on recent bullish momentum, posting a strong opening figure as markets in Asia and the Middle East pushed by orders through. That kind of Sunday into Monday open often reflects weekend accumulation by retail traders, particularly in markets where crypto trading never sleeps. However, as European traders came online through the early hours of this Monday morning, 13th of July, 2026, the picture changed. Selling pressure emerged, and Bitcoin began pulling back from its overnight highs. This pattern, often called a Monday morning fade, is well documented in crypto market research. Institutional desks in London and Frankfurt routinely reassess weekend price action and, when they judge a move to be overextended, they trim positions at the open. The critical question for Bitcoin right now is whether this morning's retreat is a healthy consolidation, the kind of pause that refreshes before a continuation higher, or whether it signals a more meaningful reversal of recent gains. On-chain data and order book depth will be key indicators to watch throughout the afternoon session. Ethereum, the world's second-largest cryptocurrency by market capitalization, mirrored Bitcoin's trajectory this morning but with a dynamic all of its own. Like Bitcoin, ETH saw a positive open, a reflection of broader risk appetite that had been building through the weekend. But Ethereum's pullback this morning carries additional nuance that is worth understanding. Ethereum is not purely a speculative asset in the way that Bitcoin sometimes is. It is the foundational layer for decentralized finance, for NFT infrastructure, and increasingly for tokenized real-world assets, a sector that has grown substantially through 2025 and into 2026. When Ethereum pulls back, it is worth asking not just what the price chart says, but what is happening with network activity and gas fees. A pullback on low transaction volume tells a very different story from a pullback that coincides with a spike in network usage. Today, that distinction matters for anyone deciding whether to add to a position, hold steady, or reduce exposure. The broader macro environment on this particular Monday, geopolitical signals, dollar strength, and any regulatory headlines coming out of the United States or European Union, will also feed into where Ethereum closes this session. So why are prices pulling back after what looked like a strong start? There are several forces worth naming specifically, because understanding the cause is the only way to judge whether the move is temporary or the beginning of something larger. First, profit-taking. When any asset opens sharply higher after a weekend, early holders who bought at lower levels have an immediate incentive to realize gains. This selling is mechanical and does not necessarily reflect a change in fundamental view. Second, liquidity conditions on a Monday morning in July are thinner than usual. It is summer in the Northern Hemisphere, and institutional desks in London and New York are running with reduced staffing. Thinner liquidity means that relatively modest sell orders can move prices further than they would in a full-staffed session. Third, the broader macro context is not straightforwardly supportive. Global equity futures and foreign exchange markets have been navigating their own crosscurrents, and cryptocurrency, despite its reputation as an uncorrelated asset, continues to show meaningful correlation with risk appetite in equities, particularly U.S. technology stocks, during periods of uncertainty. When that broader sentiment wobbles, crypto often wobbles with it. One of the most reliable ways to assess whether a pullback is meaningful or a brief interruption is to look at trading volume. volume tells you how much conviction sits behind a price move. A strong opening that was built on high volume, followed by a pullback on comparatively lighter volume, is a constructive sign. It suggests the bulls were serious and the sellers are merely opportunistic. Conversely, if this morning's retreat is accompanied by rising sell-side volume, that warrants greater caution. Sentiment indicators, tools like the Crypto Fear and Greed Index, which aggregates social media activity, search trends, and market momentum, are also worth checking today. After periods of strong price performance, these indices often sit in greed or extreme greed territory, which historically corresponds to elevated risk of short-term pullbacks, precisely because the easy buyers have already bought. For UK-based investors and traders watching Monday the 13th of July unfold, the key sentiment signal to track through the afternoon will be whether US pre-market equity futures stabilize, as those have proven to be a reliable short-term leading indicator for Bitcoin and Ethereum in 2025 and 2026. The immediate impact of this morning's dynamics is being felt differently depending on the type of market participant. For short-term traders, those operating on hourly or 4-hour timeframes, this morning has likely been a challenging session, with whipsaw price action punishing positions taken at the overnight highs. For longer-term holders, often called hodlers in crypto parlance, the Monday morning pullback is largely noise against the backdrop of a multi-month or multi-year investment thesis. The ripple effects extend beyond individual portfolios. Crypto-related equities, shares in mining companies, exchange operators, and blockchain infrastructure businesses listed on the London Stock Exchange and in New York will be tracking this price action closely. Funds that hold Bitcoin or Ethereum as part of a diversified strategy will be rebalancing. And retail sentiment, which remains a powerful short-term force in cryptocurrency markets, will be shaped by the headlines and social media narratives that crystallize around today's session. The narrative that emerges from today, whether it is framed as a healthy dip or the beginning of a correction, will influence retail behavior for the next several days. Looking ahead over the next few sessions, and basing this purely on what the current evidence suggests rather than speculation, there are two plausible scenarios for Bitcoin and Ethereum after this morning's retreat. The first, and arguably the more likely given the strength of the overnight open, is that this pullback finds a floor during the US afternoon session today. When New York desks come fully online, larger institutional players tend to provide price support at key technical levels that have been established over recent weeks. If buying re-emerges at those levels, today's retreat could actually set up a more sustainable move higher in the days ahead. The second scenario is that this pullback extends. If macro conditions deteriorate, a surprise inflation figure, a hawkish Federal Reserve statement, or a geopolitical development, the retreat could deepen before it recovers. For anyone making decisions today, the pragmatic approach is to watch the first 2 hours of the New York session as a barometer. The price reaction between 14:30 and 16:30 UK time this afternoon will likely define whether this Monday goes into the history books as a dip worth buying, or a warning sign worth heeding. Let us bring this together with the clearest possible summary of where things stand on Monday the 13th of July, 2026. Bitcoin and Ethereum both started the day with momentum, genuinely positive openings that reflected a constructive weekend of accumulation. That momentum has run into the classic Monday morning friction of profit-taking, thin summer liquidity, and cautious institutional reassessment. Neither asset has broken down technically. This is a pullback, not a collapse. But the next few hours will be important. The specific things worth watching between now and the end of today's trading session are, first, trading volume as the US market opens. Rising buy-side volume would be bullish. Second, the performance of US technology stocks as a proxy for broad risk appetite. And third, any regulatory or macro news that drops during the afternoon. If you are already positioned in Bitcoin or Ethereum, today's pullback does not, on the available evidence, demand immediate action. If you have been waiting for an entry point, the afternoon session may provide more clarity. As always in cryptocurrency markets, patience and perspective are the most valuable tools you have. Thank you for watching, and if this breakdown was useful, the best thing you can do is share it with someone who is navigating today's market and trying to make sense of the morning's moves.